K for assistance. Hello there. Hello there.
Baby, I'm a savage, I ain't romantic. When I come around, these rapper niggas start to panic.
Yo, stop panicking, guys. Buy the dip. Buy the dip. Welcome in. Welcome in.
You gotta go. You grift around, he's a clown, he's a boss. Oh, you should know. Then we know. We can see you demons steady scheming on the low, maybe.
Thank you for tuning in. Welcome to the show. Web3 Exposed goes live every single day, except Fridays, right here, 7 o'clock Eastern on X and Twitch. Make sure you tune in if you do want to check out charts and understand what we're talking about a little bit better. Like, comment, repost the stream. Why? Because I didn't sell my soul. So that means, I'm underground. They call it underground. You get me? I'm underground. That means that you got to help with liking, commenting, reposting. It's completely free to do. So thank you very much. Appreciate you. If you haven't already, jump into the community up top, Exposed Nation, right there on top of the Twitter Spaces. Says it right there. Really beautiful, Jump in there, I'll let you in. We have a few things to jump into today. I think it's fucking wild. I'm just going to start and say that it's wild that Kalshi and StockX are now teamed up to fucking do prediction markets on collectibles. You guys are gonna get fucking rinsed, and me and Chicago are here for it. You guys have lost the fucking plot. No shade. I think that's a sick ass collab as two very big companies. Gonna hold my opinions on StockX, directly. However, yeah, it's cool overall, but I think motherfuckers are losing the plot. And the deeper we get into, I'm not gonna say we're in a bear yet, but the deeper we just get into slower numbers, the more bullshit I see. Like, is it just how it goes? Like, the more we go low, the more dumb shit you guys drop. I don't know. We're gonna figure it out. We're gonna find out next on Dragon Ball Z. But no, thank you for being here. Shout out to everybody that pulls up. December 4th and 5th, we have Beat Basil going down, hosted by yours. It is the literally hardest thing I work on all year. I've been doing it for the last 3 years, and it's going to be planning. Make sure you show up for that. Well, you still with me, or are you rugging? Your financial advisor, whoever that may be, whether it's yourself or, we're in such a different part of our market now where there's so much bigger money involved in manipulating it. So yeah, maybe at one point you felt like a G and you could trade the market and all that shit. But hey, if you're not the suits and the bigs, you're probably gonna get washed out. So just stop over trading. Stop, like, literally not trading is a trade, right? Like, hello. Um, yeah. Anyway, happy Wednesday. Thank you guys for being here. Tune into the stream if you guys want to check out the charts and pretty much what Will is going into. I'm gonna get him back up here and see if he's there. Will, you there?
I've been here. I think you wrote down a stream too.
No, my computer died, but you had left spaces. So yeah, I'm gonna get my charger. But go ahead, man. Thank you for being here. Happy. We'll jump right into it. There was a lot of price action today. I want to get into that.
Yeah, there's price action. I think people started freaking out when you dipped below 90. They, atypical. People texting me again. It's over. It's over. That's all I hear every day. It's over. Again, just look at the percentage drawdowns that we previously had. 33 was our first, 32 is our second, and currently we haven't even reached 31. I think we're roughly around 30 right now. We just hit 30. I think if you're in that range, though, 30 to 32, you're in a good percentage range pullback. likely to see a bounce. It's just a matter of liquidity can push above the resistance range of 100K is kind of the questionable scenario here, which means we're likely to get a pop off here with the market. It means the market may shift up pretty significantly, which would be big. I think overall, just people need to just kind of relax, sit into the market, and let it do what it's doing. Another thing too that people can bring it up from time to time is Aster. Aster looks pretty good. It came right into the range that I had told people was going to happen before whatever even came close to here. It came up, broke out, broke down, retraced all of its FVGs, and now it's kind of it played through the whole leverage range of the lower end of the FVG, and now it's pushing back above that demand zone. So this first green box right here is my first demand, and then the second one's the second demand. You can see we're kind of pushing into second demand. But, to get more demand and push higher, you got to break above this current demand zone right here. So you'll have to get above like about 145-ish, I'd say. You get above like 145, again, just previous support. You can definitely see higher demand range, which should push you up to the $2 range. So it's just a matter of kind of watching this thing, as it kind of plays into its range, as it plays into its ranges. Not everything's like bearish right now, even though a lot of people are looking at, everything is bearish and they keep pointing to Bitcoin. But, ETH's holding up pretty well around 3K. I saw some people memeing today saying it's going back to 1. We'll see. I think if ETH goes back to 1, that's going to be pretty bad. It's going to be really bad for Ethereum. So we'll see if whales decide to go ahead and float that price. Solana's still holding its original price range since basically March of 2024, playing into that lower end range. Again, this is the fear range, is what I like to call it. A lot of people don't like the bid here. Every time they think there's going to be a significant breakdown, Solana comes down in this range, taps it, maybe breaks through it a little bit, pulls back into it, and pulls back up, which is really, always interesting to see people get very fearful around this range. And again, you see Bitcoin continue to just get, absolutely slaughtered, basically pushed down to 88K today. But you see things like ETH and Solana still hold their ranges, which is, again, showing strength in these markets. It's not weakness like everybody thinks it is. Like when things capitulated over here in 2022, everything capitulated together. Like everything got smoked. It wasn't just like, one-offs or two-offs running. Everything got smoked. And those type of environments where you're going to get like rate hikes and so on and so forth, yeah, you're going to get a lot of things wrecked. But right now, it's like, what is your cause for an environment that's going to be negative for crypto, an environment that's going to be negative for markets? There's really none, right? You're not going to get a housing collapse not anytime soon, especially now if they do 50-year mortgages. You're definitely not getting a housing collapse anytime soon, right? They're just going to float the price, just keep them elevated, and you're just going to be buying higher priced houses with longer term loans. And in addition to that, it's going to be the same thing with the car market, a longer term, loan, which doesn't make any sense with a depreciating asset. They start doing that too. People will take those loans, and that's going to float the car market. It's going to keep prices elevated. And I think that's pretty significant to think about. I think a lot of people aren't thinking about those things. They're just thinking Bitcoin number down, bear market here. They're not looking for rebounds or bounces. Like people are just pointing to prices and saying this is where it's going. I think if you're going to play the vol right. And playing the vol right means playing both sides of the trade. Even though we got the drawdown, you should look for the bounce, and you should look for the top end range of the bounce. Again, I'm thinking that's going to be around 100K. Again, you breach that range, flip it, you're good. And then you've got the rest of the market just kind of playing into its ranges too. Rivian's still kind of playing its range. I really thought this would be the breakout, this last range, which really sucks because, we pushed it to like almost $18 more or less. And it looked really clean for a breakout here to push into this demand range that I'm really looking to capture. It's basically a gap that's sitting up around $22 on Rivian. And we weren't able to achieve it. We ended up getting shut back down in the same rejection range of 1650. And now, we'll likely kind of bleed back down, maybe hit that $13 mark again. But, really, I'm just looking for this bigger breakout. So I'm just kind of holding on to that long side position. I'm still in the green on that. Posted that to my followers too, 37-cent entry. I think currently it's still sitting at 52. So still pretty significantly up on those call side positions. Um, and looking for those to keep on just kind of pushing through. Rex still kind of holding that range, just like we talked about, still kind of chopping sideways, not really doing a whole lot at the moment. And BNB, is likely, I think we'll see like another $700 BNB. It'll probably retrace the all-time high and then find support around that range. So nothing too crazy there either. PLTR had a nice little rebound today. I thought that was pretty interesting, as I'm not looking for that thing to be bottoming anytime soon. But if it ends up kind of rolling back out, that'd be very interesting, because I think it's closer to a top than it is a bottom on that one. But Nvidia still looking like relatively really strong, and like regardless of how much bear div they've been playing on this on a monthly, they just keep racking it up. And again, I think that's more due to government funding, right? Anytime the government gets involved, these things just up into the right, infinite SPX style type plays. And I really think that's what Nvidia is going to be. It's going to be one of those stocks that's going to look like an insurance company, essentially. And if you've ever invested in insurance companies, you know what I'm talking about. They're up into the right, infinite. Overall, though, markets looking pretty clean, at least for a rebound, I would say. Again, I would say, like, if you're looking for a bottom on Bitcoin, absolute bottom, if you're going to bottom this range, I'd say like 82 to 86. If they're going to push it there, really this 90 range is holding pretty well. I think a retest of 100K is kind of in the books relatively soon, maybe next month even. It's just a matter of, can we flip that range? Because if you don't flip it again, you roll off of it. And that's where you have to kind of be decisive about how you're going to handle that and decide if you want to take profit or if you want to kind of run with that and see if it goes higher. That's the way I would look at it ultimately. The structure's all here. I pointed it out. I try to make it super simple for people. I blocked it out, each range, each consolidation range, just so people can understand like what I'm seeing here, to try and make it super easy for the average person who may not understand TA, so on and so forth. But yeah, that's basically what I would say with markets. Still looking pretty solid at the moment. Nothing in super free fall. I get that 125 to 95 or 90 is like a huge crush for a lot of people, but it's like it's a 25% pullback if you think about it. It's crypto, that's nothing. So a bear market is atypical 70 to 80%. So, and I know some people are like, oh, it'd be 90. Now each bear market gets better and better as far as pullback percentage, because volatility lessens the more and more liquidity you get into an asset. But yeah, that's basically the way I would look at it. It's more of an opportunity market than it is a non-opportunity market. Again, just look at, again, I press this every single time, because people say no altcoin season, no high risk, blah 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 blah. But it's like you've never had better opportunity on high risk plays. Like, these things are absolutely slaughtered. Everything's slaughtered. It's like, if you're like, oh, it's going lower, it just doesn't make any sense. Like, I get it if you're like, oh, Pepe or whatever is overpriced, but if you're looking at something like these stocks that are completely crushed, like on the high risk side, like, I think there's a lot of opportunity there. If you look at even some of these cryptos that are literally on floors, right back to their 2022 lows, pretty much, and you're like, oh, they're going to go lower. It's like, I don't think you should be thinking that way. I think you need to look at these more as opportunities than this bear market's going to get more, become some kind of super, winter in crypto. I get that we didn't get the parabolic move in ETH that we normally see, and that doesn't mean it can't still happen. I get that we didn't get a huge breakout of all-time high for Solana, right? Again, doesn't mean it can't necessarily happen. But at the end of the day, you have to look at the opportunity that's presented itself in front of you. I'm not saying go buy ETH or buy Solana, but I'm saying, like, if you fish through these charts, you can find a lot of opportunity on things on floors. A lot of them. And the PVP is significantly less right now, which is what a lot of people are not looking at either, right? Anytime there's less PVP, that means there's more opportunity for you as an investor, as a trader, as a leverage trader, whatever you do, there's more opportunity with less PVP. There's less ripples, the directionality. You just got to kind of play the chart for what you're seeing.
Will, I got a question.
Michael, did I say you could ask a fucking question, Michael? This is what I'm talking about, you fucking entitled ass. I'm fucking with you, Michael. I love that you're here. Thank you for being here, fam. Go ahead. You're good, bro. Go ahead. I think you got Elon muted. I'm sorry. You good, Michael?
Yeah, I'm good. My mom is in the audience, Prophets. You're making me look bad.
Fuck Mom. I'm just fucking with him, Mom. I'm just messing with him. Fuck.
I got a question for Will. Will, do you think that the price of Bitcoin will ever go back to 125K?
Never. It's over.
I know everybody wants me to meme, but no, I'm not going to. I absolutely think it will. I think it's going to go a lot higher than 125K.
In 5 years?
So let's put it this way.
In 5 years? That's your next bull market. I think you're going to be a lot higher.
All right. So with that being said, I'm sure people remember what they felt like when they were seeing the price of Bitcoin at 125K and what they were telling themselves mentally on, damn, if it ever goes back under 110, I'm gonna buy it. If it ever goes under 100, it's there. What are you doing?
Yeah.
Because it's gonna go back up. I mean, human nature is crazy, guys. I've been dealing with human nature my whole life. You're not gonna care about your assets getting drained until you get drained. You're not gonna care about losing the files on your laptop until you lose your files. This is the same scenario you're in right now. Your mind is playing games with you. Because if you look at the numbers that you could buy in at right now, and you say to yourself, what was the feeling like when you saw those numbers at 125? If you honestly think that Bitcoin is over and it's never coming back and everyone's going to go back to regular life and we're all going to use printed fake money, that's on you.
Well, the thing is too, is like people, one thing that I noticed with this space is the nature of investors in this space specifically is buy up, not buy down, which is logically the wrong way to do this. Like, you
love buying the top. Let's go.
They don't like buying when it's drawn down. They like buying it when it's running up.
Well, I think that's like a psychological thing, right? Like, because if you look at the candles and stuff, the colors alone, like red and green, like the green and red is literally a psychological number. Like, dude, who wants to buy something that looks like shit? Exactly, I do as well.
Yeah, I tell them, like, if you have a hard time with red and green, invert your colors. Because red means go.
I keep all mine the same color.
Stop and green means go, right? So, like, in your head, logically, you're gonna think of it as like a stop sign or a stop light. Whereas green in your head is going to logically tell you it's go time, right? So if you invert the colors, a lot of the time it'll make you think a little more logically. Now, and here's the thing, like the people that make these charts, they do that shit on purpose. You think they didn't color it that way for a reason? Of course they colored it that way.
You know, in China and like overseas though, it's the opposite, right? It's like red is good and green is bad. That's why I keep all my candles and all my charts are just gray. I don't even know if it's up and down. It's just gray.
You can do like mine are blue and white, right? There's really no difference between blue and white in my opinion. So I try to keep mine like it as a neutral color, so that way there's never any up or down. And usually the lighter color is more the flash signal, right? So I usually use my white as down, and then my blue is up. So I mean, again, it's just I think the only thing that really matters a lot of time, and even volume can throw people off, right? Because they'll see red volume or green volume candles and they'll think that, oh, that whole month was just selling, and they'll see a big red candle, but that's not how volume works. Volume is a combination of selling and buying. It turns red if the buying was slightly higher. It turns green if the selling was slightly higher. It turns green if the buying was slightly higher. It's not a significant candle saying, hey, it was only selling on that candle and you should be fearful of more volume candles of selling in that we'll say extent of that volume candle. So again, a lot of this is just psychological shit that really just messes with people. And like, this is why, like, it's a lot of the time for me, like when I discuss these things, for me in my head, it gets tiring because it's like, I have to explain to people over and over and over and over and over again. It's like, dude, you went to school, right? You got past middle school. You should have the logic to understand these things. They're very simple.
Wow.
No,
I was taught this in middle school, right?
Wow.
I'm just talking your colors, right?
Listen,
your red and your
I tell
greens.
ChatGPT to talk to me like I'm a 10th grader because that is the last time I actually remember comprehending anything. So for you to tell me, Will, that I'm an idiot like that hurts a little bit. Just saying.
That ain't a slide at nobody. It's just a point that people got to think about these things. And again, it's about opportunity, right? You got to think back to how you felt when things were running. Man, if I would have gotten in at 5 cents, man, if I'd have gotten in at $2, man, if I'd have got in Bitcoin at 15K, man, if I'd have got in at 5. Like people, they always think about this shit after the fact, right? When it's at 125K, they're like, damn, if I'd have just bought at 15, I shouldn't have listened.
I really wish I bought at 15, Will. When it was 15,000, I remember looking at my bank account and I was like, 15K? What if I need it next month? Like,
wow.
And 15K is a lot of money. Like, I'm not trying to be like I had 15K lying around, but it was like, I was really thinking long and hard. And now when I see 85K, 90K, I'm like, I could have bought a whole freaking coin for 15K.
People right now are more thinking about like, if I would have sold the top versus like, is this an opportunity to get in because I miss selling the top, right? Or is the top in? Or is the bottom in? Here's the thing. If the top's in, I missed the top. But guess what? I took profits along the way. I'm not that dumb. And I think
when you say top, when you say top, you're talking about the local top, right?
Local.
When you say profits, do you mean actually denominations or just profits?
Oh my God.
Fiat.
When you say candles, you mean
that went into other stocks and crypto. And that's the funny part is like, I don't take the money out and go pay bills. I take the money out and I put it somewhere else where I think I got more opportunity. And people just don't understand that. And then like, guess what? If that other thing that I have opportunity in blows up and I'm up like 10X and Bitcoin's at like 80, 90K, guess what? I'm rotating back. And these are things that you
heard it here first. Will doesn't pay his bills.
I pay my bills, but I don't pay my bills with money I'm investing, right? And that like people have an emotional attachment to the money that they have invested, and they have this like time period where they're like some kind of imaginary time period where they're thinking like, okay, if I just get a 10X on this 100K, then I can go buy this Lambo or whatever, right? Versus like, oh, I didn't sell the top at 125K. My 100K is maybe worth like 60K. Now I'm upset. I'm going to sell at 60K and go look for something else versus just, okay, I guess I got to hold on to it until it goes back up to 125K. This is the mentality and like the gymnastics people go through. People don't realize too, like Bitcoin went from 15K, right? 15K to 125K. Like you're not expecting some profit taking along the way? Like none? Nobody's gonna sell?
Nah, bro. Up only, bro.
Forever.
There's gonna be no pullbacks, no consolidation ranges, nothing. Just up and to the right forever. 250K, right? We're just gonna go straight there.
Yep. By Christmas, Will.
To be honest, I do look at Bitcoin as like gold. I'm not gonna lie. Like I'm not saying I'm gonna hold it till 250K, but it's more of I will say Bitcoin compared to all the other alts is something I am hoping to hold. But I know what you're saying. Well, I think too, like to what Michael was saying before. It's funny because I'm always like in retrospect, but to what Michael was saying before, it's like, and then when it happens, I'm still thinking, do I buy more now? Because Michael, I will say I bought the dip of the dip of the dippity dip. So let's talk about that. Like how many dips are you buying, Michael? Well, I'm taking a break is what I mean. I bought all the dips.
You can never get enough of ketchup.
The problem with dip buying is people get it wrong, right? They'll buy and they'll buy and they'll buy because they think it's where it needs to be. But what you should ideally be looking to do is break up your money. And if Bitcoin's at 95K, it's a bid range. If it's at 90K, it's a bid range. 85K, it's a bid range. 80K, it's a bid range.
Bro, All I know is Tom Lee told me I was supposed to have $6,500 Ethereum right now, and it's not $6,500 Ethereum right now.
Look, we're never going to discuss Ethereum again until it's over 5K. All right. Just never, we're never going to talk about it anymore.
Yo, how about Sui, bro? How about all the Sui lovers? Crypto Twitter was full of Sui.
Alone, and it's
$5 Suis, everybody loved it. $1.60, everybody hates Sui right now. Nobody's saying nothing.
Dips, eating those dips, opening up positions every day, Trapper.
Look, Trapper, all right.
I think it's your easiest 3x right now.
I got in Sui at 49 cents.
Yeah, dude.
Run it back. I don't care. Run it back. I'll buy more.
So when do you guys run out of money?
Oh, we work. So
Never.
We don't run out.
We don't. It's called IRL airdrop.
I mean, you keep buying, but I never hear anybody, run out of money. So
Monad paid everyone.
But Beloji, here's what I explained, right? Like I'm not buying. I'm buying, make profit, buying something else, make profit, buying something else, make profit, flipping back to something that sold off, waiting for it to go up, take profit. And like, again, this is the logic people aren't getting. They're
yeah,
like,
I think what it is, bro. I think what it is. There's people in the space that don't have a form of income, so they're constantly moving what they have around, and obviously they're feeling the hurt of the market. But then there's obviously people that either have a business in Web3 or they're bringing their funds in from Web2, and they're positioned differently. So at the end of the day, like when you're stacking sats, I call it stacking sats, right? It doesn't matter how much, what the price of Bitcoin is. You're adding sats to your wallet. And I think that's how you should look at it, because a lot of people coming in, especially the new ones, as we know, don't understand the concept of dollar cost averaging, or they're trying to time the market, and this is why everybody gets wrecked, and that's why we get into the position we're in now, which is this insane fear metric, and it's not good when it comes to retail.
100%. Now, in Will's logic, I'll give you an example. I bought Bitcoin at 50. I sold it off at 112. I moved around to ETH. I'm back at my entry price at 50 Bitcoin. I moved from ETH, I bought Solana at 180. Solana went to 130. I'm now down more than if I just went unstable after my first trade.
Bro, it's like you passed around your own money when it came back in some format.
I don't think you guys got the point, but
no, I got the point. You're down, but the point I want to tell you, Beloji, is like you have to sell something that's up and buy something that's down. Solana was never down. ETH was never down. Like these
I think that's the issue. Will,
but that's
that
what
a lot
saying.
of people. I think a lot of people think that they need to keep their money here, and rotating means keep it in crypto and keep it specifically within certain spots. Like you're saying, Beloji, you went from a major to another major to another major when majors are taking major hits. Like, I think that's one of the big problems. Like, to be completely, like, 10-8, I swapped 75% of my Bitcoin for Palladium. Like, everybody can shit on metals, but, like, that's what I did on. So I moved it out of crypto because the crypto is taking a hit.
That's actually I rotated a lot of my capital out of crypto too.
But you see, once you do that, then you would have to go in a more complex fiscalists once you do your taxes, which is going to cost you enough money for you to not make money, even though if you're profitable.
But here's the thing: if you're holding for more than a year, is it going to really cost you anything?
I mean, if it depends on when does your closing. It depends what's your year end.
Let's say I took, 200K, pulled it from crypto, bought Palantir at like $13, and I'm holding that for a year, right?
So you took a loss. So basically, a fiscal, like a good CPA would be like, hey, okay, so you took a loss over there. Now we're gonna translate that loss into the current trade, but the current trade cannot actually be taxed because it is not yet a done trade, basically. So
yeah, exactly, and that's what I'm saying. Like, you can, if you rotate L's into the right things, you can make them up, right? And you can lower your taxes. If you can rotate W's into the right things, but you still have to pay your taxes when you rotate them.
But
right?
Will,
Yeah, but it also depends. It also depends, right? Because I mean, precious metals. Some states, the sales and buy and sells. I mean, the sales and buys of precious metals aren't taxed. So like, you need to take like there's certain ways for taxes as well, right? It's not just a matter of take your money out and here you go. You got to pay those taxes. Like if you have properties, if you have your own business, you can offset taxes certain ways, and that's another thing that people need to learn as well. Not from crypto Twitter either. Like actually talk to a CPA or do your own research.
But you see, at that point, like obviously we're a very few to do that, but at that point, what happens is when these individuals go and see a proper CPA and they see the prices that they actually charge for these type of things, it gets too complicated and they actually back off. They bring their money back into crypto and they don't even, they don't do anything.
A CPA, like the amount of money people spend in crypto, thousands upon it's like 10,000s upon 10,000s of dollars on the average person. They can definitely afford a CPA. They're just being cheap.
Yeah, 100%. Like me, it cost me like six grand every year, for one of the businesses.
Yeah. Like people, that's like somebody saying I can't go get a business license because it's too expensive.
Yeah, basically, but it's kind of crazy. It's kind of crazy to talk about taxes in this industry, is because aren't we here to avoid? Hey, I'm not gonna say. I'm not gonna say.
I got into this room.
Taxes are voluntary.
No, pay all your taxes if you're in the U.S. If you're not, then congratulations.
I'm just literally picturing
Canada here. I don't even get paid. They're just like, taxes. That's all you do here.
We are not here to avoid any taxes. FYI. Fuck.
Yeah, don't worry.
This is a recorded space. Let's reset the room.
I like to pay taxes. I pay tax.
Look, I pay my taxes when the IRS sends me a letter. Okay,
listen, I
have
Will, allegedly.
I made $2 and I drive Uber.
I'm literally picturing girl in the verse. I don't know why I picture this, but I picture girl in the verse showing up to the next crypto event with just like a wheelbarrow full of gold, and she's just like, "I'm out. This is it. I'm under the radar."
I'll be honest. It's not that we have to be under the radar. It's that you get scrutinized when you go and say that you work in crypto. So that's all it is, right? And so that's why I love my new MetaMask card. It's not even a plug, but like I just love my card because I actually get to show. This is very interesting, guys. Keep this as a note.
Must be nice.
You'll get one.
It's taxed, by the way.
You get to show the government that you're using your crypto to buy things, and then you could expense those things. So I'm having a blast using the card and going like, Michael actually has some good ideas. Like I think you had told me in Denver, Michael goes up to businesses and is like, "Do you guys accept crypto?" And they're like, "No." And he's like, and he taps his card and he's like, "Yeah, you do." So
it's a conversation starter, like people got to realize what's happening in front of them. And I think unless you bring it to their face, they're just floating through life. They don't know what the fuck is going on.
Yeah, I have a very, very serious questions for you guys, because I feel like this panel is extremely intelligent. And this is serious. So I've been looking for a payment processing company for the last, week. Because I think payment processing companies with middlemen, they are overcharging, merchants and stuff. And I've studied the interchange costs and stuff like that. So I'm actually curious, are you guys familiar with any company in crypto that has a direct deal with MasterCard, Visa, Amex, Discover, Union and stuff like that?
Are you dead ass?
Yeah, I'm dead ass.
Are you dead ass asking that?
100%, yeah.
There's hella fucking companies teamed up with fucking MasterCard and Visa and everybody you just said.
I know one.
Wait, that is a payment processing company?
Yeah.
Like a lot of those are just
Stripe. Go to Stripe.
No. See what you guys are talking about? You guys are talking about, I'll give you an example, Stripe, right? Stripe overcharges companies and they don't actually give you a proper direct deal. Stripe charges 2.5% on all credit card transactions, plus 0.75% and plus 7 cents on all debit and on all debit and PayPass transactions. So You see, like that's already way above the price
the question
of
is just,
merchants.
how much are you processing a year?
That's the thing. So I'll give you an example. So I have a client, right? He processes approximately $25 million every month. So for him to go with Stripe, that would be suicide. He would be spending a shitload of money on bullshit. So how can I approach him and be like, hey man, you see this fees that you guys are paying here, I got a direct contact with you and I can hook you up with the greatest processing fee in the industry.
The problem is twofold, because there is a credit card processing fee, but then there's a merchant and a settlement layer. So the difference is like, for example, a lot of these crypto cards, they're sitting on a centralized exchange, or you're ending up processing it on the spot and it settles it in fiat. But to the merchant, they don't know. You're not going and requesting any merchant to change their point of sale system or to upgrade anything. You know, you have to kind of Trojan horse its way through. So as of right now, because of the existing payment rails, because of American Express, MasterCard, and Visa, they have that chokehold on the industry when it comes to these fees. I mean, it's a burden on businesses. And a lot of businesses now are passing off that burden to the customer. You might be seeing on lower receipts that you got to pay a higher fee, or there's like a processing fee. It's turning into a system where in the next year, the businesses are no longer going to be liable for credit card fees. It's going to be actually passed off to the customer, which again raises the cost of everything. So
that's already happening, and it's
that happens overseas a lot. It doesn't happen as much in the US. It does happen overseas.
Yeah,
a lot.
but just to add to that too, because like this is something else I'm saying. It's not just that they're doing it with tariffs. They're doing a lot of different things. Like they do it, you know, indiscriminately through different products and so on and so forth. But
so businesses, what they do,
they're
businesses
shifting all the burden.
Oh, sorry. I apologize.
No, you're good. Good.
They also have to cover the other side of like what they're rewarding a consumer with. Like that's why there's like a baseline. Like 2.5 isn't the baseline. Baseline's like low mid ones.
No, that's a lie. That's a lie.
The thing is, American Express is a flat 3%.
The only way you're getting around that any differently is by a bank. And $25 million a month ain't going to be enough for you to fucking like play that top tier. Like $25 million a month, you're not getting into tier. You're not getting into Group A. You're getting into Group B, and right now you're mad because you're in Group C.
100%. Now you see, like that's. By the way, I'm not calling you a liar, but I'm just like saying regarding the information, because I've been through all of these like fees and interchange cost and the middleman and the processing and this and that and Pfizer V and Clover and Square and all of these fucking bullshit ass terminals and payment processing. I just want a company in crypto that has enough capital for them to actually start their own payment processing terminals. Direct contact with Visa and MasterCard. Yes.
I got a question for you. So hypothetically, like it really all it does is it takes a mindset shift, because at the end of the day, we wouldn't need point of sale system, merchant service providers, credit cards if everyone was just natively dealing on chain. I mean, we're in the only industry that on a Sunday night at 4 a.m., you could send millions of dollars to someone overseas with no KYC, minimal, fraction of a penny transaction fee, and within a matter of a second. Banks are not going to be able to do that. Traditional systems are not going to be able to do that. So I think like once people realize this, because any business can spin up a wallet right now, they wouldn't even need electricity or internet to receive payments. And it's going down that path. I mean, it's going to take decades, obviously, but
you also save a lot of money too. Like the fee, all these processes are a third party. They're basically just taking money out of the system, essentially, right? Like exactly to what Michael's saying. Like I can go on AVAX, right, and just trade their stable coin and literally just send it for like fractions of a penny, like as much money as I want, no costs.
Yeah,
there's rebates, there's insurance, there's a lot of things that like. You could probably fucking negotiate better, but you're going to get no protection on processing. So like as soon as fucking like the dirty side of the world fucking sees it, they're going to realize that you're the person to fucking scam against. Like a point in credit card fucking processing is pretty much protection. Like the one point right out the gate is that. And then also like between that, and then also you have to remember like part of that is also kicked back to the other side from like the baseline of like everything on a credit card, like the reward system is built off the processing fees. You can't ruin like Amex. Like all these companies will say, cool, you get it down low enough, we're not going to let you accept these cards because of that. Like, like that's what I'm saying. Like you're never going to get like 1.5 is almost like the baseline unless you're like doing like billions of dollars a year. Like unless you jump into tier A, and tier A is billions and billions of dollars, like the 1.5% range is like core bottom of anything.
Are you talking fixed or variable?
It depends. I mean, you're doing $25 million a month. Like call that what it is. Like if they're doing 25 million and they're making a point clear on it, because they're not making 2.5, they're making like a point. Like, dude, call it what it is. Like it's like a couple $100,000 a month. Like it's big for a client, but it's not big enough to fucking like move the needle and jump into the fucking pond with the big boys.
That's exactly that's exactly what I'm talking about. It's so cabally.
You can't jump into that yet.
It's so cabally. It's actually disgusting. And what we're actually talking about right here, right now, right this second, to change that. And like it's good that you see some companies are making US, like for example, I'll give you Square for example, right? They enabled which is Stripe. They enabled USDC and stuff like that, which is good. But the only solution to change this whole industry of MasterCards and Visa and et cetera, is for the whole globe to actually stop using those companies, or these companies,
which isn't going to happen.
Which is impossible.
They got enough you can't fight. It's like trying to say that you got a better mousetrap for Amazon, but you need like $1 trillion to even be able to play against that.
But those things play a part though. Like if you're trying to buy something, you want protections. Credit cards are the way to go, right? Because that you can reverse transactions and so on and so forth. If you're sending money to somebody to where it's not reversible and so on and so forth, crypto is the way to go. That's the best way to do it.
No. I'm purely, by the way, talking about merchant payment terminals. That's purely
like
what I'm
one point of that is protection. Like if you want to if you want to take bank wires don't really cost shit. Like if you have like a free checking account, they have a fucking fee. But like I could send fucking $20 million tomorrow on a fucking bank wire, and it's at a zero cost to me.
Yeah,
zero costs besides your time and going through verification and dealing with
bullshit.
Like, fine, zero cost except the time. But when you're dealing with that, like
you have no choice.
That's not too far off. Then you add in crypto. Crypto has another variable because stuff then has to transact twice in most cases to get to a realized number. Like look at what can happen in a matter of a minute in between process. So you got to leave a bumper for like crypto shit unless everything's USDC. Every layer you're adding is adding risk or incentive.
Yeah.
So like,
they all need to be PCI compliant.
Yeah. At core, you're getting down to like, okay, here's your 50 cents. Then $1 that's coming in there is for security of both ends. Points are coming in here for like rewarding the consumer to want to use this. So like you're 2.5, like look into like Corpay. Like if you want, like look into Corpay / Comdata.
Yeah, but you got to think though too. At the same time, we think it's cheap, like $200 here and there. But like if you're talking like 2 million transactions a day,
it's expensive.
Transactions a day.
That's what I'm
trying to say. Look into Corpay. Corpay like does everything for like Uber Eats. How Uber Eats and Uber generate millions of fucking credit cards an hour for all the transactions. Like Corpay, and then they own Regions Bank, which is like central US. They buy it. They're like one of the number one processing on both sides. Like, whether you need the fucking payment side or the other.
Who's talking, by the way? I haven't looked.
Chicago. Too big Chicago.
The other thing too, guys, is that it can't be like this for too long, because think about companies like Amazon. When you get that big, every penny counts, right? So if Amazon's processing millions and millions of dollars, if they just flip that switch to a crypto company, like my boy was saying, right? Then they are now saving that 3%. And sometimes it's more than 3%, because like Chicago was saying, it has all these fees that are in there for like the American Express rewards, all that stuff. The actual vendor ends up paying all those fees all together. And that's another thing. So they pay the fees of the 3% or whatever, but they're also getting charged of the other luxury fees. And there's international cards. Here in Miami, whenever we charge cards from people that are like French or Brazilians and things like that, there's other charges that comes with those too. So something's got to change.
I'll tell you this. Okay. So you have a universal, you have a global interchange fee. Okay, that comes directly from Visa, MasterCard, Amex, Union, Discover, all of the majors, right? There's a universal fee, and that is set. Nobody can change it. Nobody can pay lower. Nobody that's automatically set. Now, whatever extras that these merchants or you guys pay, that is all up to the reseller or the individual that goes to that merchant and be like, hey, so you see I don't know, fucking fixed rate, you pay 2.7%, and this is your rate. And you know what? If you pay this amount, whatever, you're gonna be fine. Etc. bullshit, right?
Yeah, but that's what I'm saying. The 1.5 is like the tier guy. You're getting pitched by like everybody who has a fucking credit card processing, everybody who's going fucking signing people up, everybody who's doing all this.
Yeah.
That's where like I got guys that'll fucking try to get you a fucking 3.5%. They're taking a 1/4 point. Their company's taking a 1/2 point. But like there's still stuff that's baked into it. Like until you ever get rid of the whole system of like, because there's got to be incentives to use cards and switch to fucking credit and everything else. So like that plus security, like security part of it, call it 1/2 point to cover stuff. If you wanted to like scratch out all that and not be protected and not be able to accept certain cards because of that, like I get 1.75% cash back on all my spend.
Yeah, but Chicago, that is included in the interchange cost. That is not the extra.
1.75% of my spend in cash. If I take it, like I got better cards than that.
Yes, but that is included.
My core pay is 1.75.
Yes.
I can spend any amount and get that great cash back.
That is included in the interchange universal cost. It is not on the extra of the merchant.
But it really in theory is, because no one goes under a certain threshold, which is why all that stuff operates in a circle.
No, so
I'll saying. Like you can get processing and get under 2 instead of 2.7. But like when 1.5 isn't good for you, you're not at like a tier. You're like you can't fucking throw your dick around like that.
No. So look, I'll explain it very briefly. So as a merchant, right, you have different charges, right, depending on the credit cards, whether it's Amex, Visa, or whatever it is. Usually, the most interchange cost fee is Amex. Usually, they go for 2.9. So usually they go for 2.9%. That is the universal cost. So anything that you add on it, obviously it's for the payment processor and whatever reseller